Our next session, panel discussion, is on the re-emergence of residential and master plan developments. Would like to invite our panelist, Ziad Al-Char, Managing Director, Damak, Bishoy Azmi, CEO of ASGC, Robert Lee, CEO, Bahrain Bay, Gurjit Singh, Chief Development Officer at Dar Properties, and Jonathan Emery, Managing Director for Property Development, Majid Al Futtaim Properties. Please join me here on the platform. Thank you. Gentlemen, thank you for participating in this interesting session. Well, I would like to start maybe with just a short introduction of each. So maybe start with you, Gurjit, on what you do, your organization, and we just go down the line.
Thank you very much, Wael.
Thank you.
I'm Gurjit Singh, and I'm the Chief Development Officer of Aldar Properties, and look after the entire gamut of real estate development for Aldar. Thank you.
Jonathan?
I'm Managing Director for Majid Al Futtaim Communities. Majid Al Futtaim have 3 divisions within their property company. One focuses on retail developments, the other one hotels and hospitality, and the third one, but obviously the most important, is the communities which I look after. Thank you.
My name is Bishoy Azmi. Is it working?
You need just microphone close.
Yeah. My name is Bishoy Azmi. I'm the CEO of Al Shafar General Contracting. We're a local construction company based out of Dubai.
My name is Robert Lee. I'm the CEO of Bahrain Bay project. Bahrain Bay is a mixed-use master community in the heart of downtown Manama. We currently have the Four Seasons projects. We have projects with Damak. We have projects with Wyndham Hotels. It's a mixed-use community. Basically, it's a relatively right size in the Bahrain market, which is right next to eastern provinces of Saudi Arabia.
Thank you, Robert. Ziad?
My name is Ziad Al-Char. I work for Damak Properties. I'd like to view myself as one of the main promoters of residential real estate in Dubai.
I guess really the interest in this topic for many people, having been through quite a severe recession in the property market, it seems that things are on the positive side, and therefore emphasize the word re-emergence. I guess starting with you, Gurjit, is there a consensus on a renewed economic optimism? Is that reality or a fallacy? Gurjit.
I think what's happening in the market today is there's an increase in consumption, and you can see that in Dubai, and you can also see that in Abu Dhabi. That increase in consumption is actually, in the case of Abu Dhabi, if I were to speak about it, is coming from an increased investment by the government from their surpluses into infrastructure, and that's creating a derived demand right across the table in terms of investment into different types of assets. Real estate is one of the beneficiaries. The turn in Abu Dhabi is gradual. I think we've turned around the corner. You're seeing, positive appreciation in both rental and capital values in most of the asset classes. Perhaps maybe the commercial office asset class is not seeing that kind of positive turn, but certainly the other asset classes are.
Jonathan?
Yeah, on the development side, I suppose the sector that's seen the most uplift in recent months has been the residential, across different formats and sort of interesting diversification from sort of service branded apartments through to apartments themselves and into the sort of community, horizontal community villa developments. It's been interesting mix of different drivers, but positively, all from the sort of consumer investor side. Certainly, we feel that the number of projects that are moving forward feels well thought through, sustainable in numbers at the current time based on sort of our research in terms of the demand side and growth forecasts for Dubai going forward. So certainly a re-emergence. Diversification from last time around looked like well thought through projects to us. Numbers don't feel toppish at the moment. and good solid demand coming through, and importantly, I think a very sensible approach to a phasing of these developments, which gives us confidence this is a market that we'd like to enter.
Yeah. Bishoy?
I'd like to first say I feel outnumbered, sitting amongst 4 developers, being the only contractor here.
Lucky you.
Several of which we work with. So, re-emergence of mega real estate projects, definitely we agree. We see this happening. I agree with Jonathan that residential in particular has been the new hot cake. We also see a lot of hospitality and a lot of retail, particularly in Dubai, with them trying to revamp Dubai as a retail and tourism hub. We also see that the phasing and the lessons learned from the previous boom and crash are in place, with a lot of senior management and a lot of procedures having been developed as sort of an afterthought to what happened in 2008. The role of RERA in real estate master developments is also a positive role, controlling the process, controlling the cash flows, and ensuring some of the fiascos that happened earlier are not repeated. So in general, we see this re-emergence, and we see it as being an improved, say, second time round. Let's put it that way. Yeah.
Robert, do you share the same sentiment?
Yeah, I do see a general lift that's coming through, and it is actually a buoyancy of sort. There's a lot of capital that's flowing back. Number one, the bond market disappeared, and there's a seeking of opportunity from different types of capital back into real estate. And that's why there's a lift that's seeing. On top of that, we're actually seeing a lot of Keynesian-based economics of government releasing money back into infrastructure. And yes, I agree with many panelists from the previous session that infrastructure is the thing, and it will be the thing for the next little while. And that drives a certain level of demand, whether it's suppliers, engineers, and everything else that's coming through. I think one key thing that has happened in the market in general is that we have seen a plummeting of prices, which is a resetting of the prices, which allowed people to come back and feel the bottom of the market. And now we're seeing the gradual return coming back. And how fast we'll go, I mean, that's $1 million question. I mean, Wall Street Journal this morning came out with an article about, is Dubai coming back into the next bubble cycle? It's something that with only time can tell, but it has all the markings of an improved market, but it does have certain risks. Yes, we've gotten much wiser with the RERA and aspects and things like that. We're phasing the projects more. Having said that, the risk remain the same because of the speed of which capital can flow in and out of this market.
Ziad, what's your take on this re-emergence?
If we're going to talk about re-emergence, let's try to split things. In terms of interest, the interest in the Dubai real estate market did not go down, did not crash. The interest in the Dubai market, the interest in the Dubai real estate market was strong from day one this market was launched. We are in a market that is only 11 years old. We celebrated in May 2012 the 10 years of the real estate market in this emirate. We are still a very young market, and definitely a very young market has some time to evolve, but the interest is very high. The interest that a small emirate of 4,500 square kilometers that is attracting in terms of tourism, business services, logistics, is all adding up to a very big interest in real estate. Yes, we had a crash in 2008 and 2009, but we need to go back and I think once and for all understand what were the main drivers of this crash and how they are coming into play today. And the two main drivers of the crash in 2008 and 2009 was that you have a market which is 6 years old and booming, but totally unregulated. In terms of having a market which is 11 years old and fully regulated like the Dubai market today, which has world-class regulation, is really impressive. So you've corrected one of the biggest problems of the crash of 2008. And this is giving more buoyancy for the market, more trust to the market, more transparency to the market. The second problem we've had in 2008 and 2009 was to a large extent an imported problem, which was the over-leverage on the market. But also regulation has improved on this and has regulated the amount of equity that every developer needs to put in a project before that project is launched. Today, a developer is entering a new project with at least 30 to 40% of the construction cost tied into the project before the project is launched. The developer is today entering a project when the land is fully paid for and fully handed over for. At the same time, when the buyer is buying under the new regulation, the buyer is also committed to the unit because he knows there is a law number 13 and law number 9, and if you default, you stand to lose 40% of the value of your investment. So what we're seeing today is a resurgence of the purchase of real estate, but stemming from the fact that the interest was high and still high and going into higher places.
Gurjit, I'm going to probably pick on you. I'm familiar with you a lot, so I would do that. You were at Saruh before. Now Saruh merged with Addar, and now it's become jointly together. I remember always on panels when we were talking about the property market, the property sector, you always talked about the demand, and there wasn't demand. So there's too much supply in the market, but there was less demand than supply. Is this the case still in Dubai and Abu Dhabi or the rest of the Gulf, or have we actually overcome that side? So where does the market in terms of supply and demand stands at the moment?
Well, of course, there's a duality of markets between Abu Dhabi and Dubai. And within Abu Dhabi and Dubai themselves, there are actually multiplicity of demand sectors. I think the commonality between the two is there is demand for well-located developments which are being driven by, just as what Ziad mentioned, developers who are in the money with equity put down on the developments and off the ground. So that's where you're seeing a lot of demand gravitating to well-planned, good developers, good locations. And I think the other commonality is that infrastructure has improved in both the locations, and that has actually created a huge multiplier effect for real estate residential demand along all the areas where infrastructure has improved. But supply is still coming into the market, you know. I think if you were to look at, and this I can only relate the figures that are given by a lot of the analysts who are out there in the market, supply is still coming in big numbers. The take-up rate is the most important thing, and I think the take-up rates in Dubai have been quite healthy. The take-up rates in Abu Dhabi have also been picking up, you know, and I say picking up very, very gradually. Abu Dhabi is just turning around the corner. It's very positive, but it's picking up very gradually. Again, in very specific locations and in those developments that are already either completed and have a very good management structure in place and have a clarity of titles being delivered at some point in time, meaning strata managed, strata structured, and with good management corporation type structures having been implemented for homeowners association. You're seeing demand going to those particular type of residential developments.
Yeah. Jonathan, moving to Majid Al Futtaim, being a very successful developer in lots of aspects, especially in the retail sector and other sector. What do you look for when you are embarking on developing you know, a master sort of plan development? What do you look for? What are the criteria for Majid Al Futtaim to say, yes, this is what we're going to do, and this is going to be profitable for us as well as beneficial to the community as well?
Well, our investment strategy around the community space is driven by the properties company's overall strategy, balancing our aspirations to continue to grow within the retail space and hospitality and communities. Essentially, we see the strategic fit of those three businesses is a key attribute of Majid Al Futtaim, our ability to bring those three important components together to create, in my case, places where people want to live, adjacent to, you know, great retail amenity and hospitality, together with you know, schooling and other social infrastructure. So it's about you know, bringing together key asset classes that make, you know, fantastic places to live, and, you know, communities is a way of leveraging that value and also supporting value for the other asset classes. So it's a strategic fit across our business groups.
What sectors, Jonathan, is the priority for MAF in the next sort of, say, 5 years? So I guess what sectors do you see as growing in your business, and what sectors are not growing?
In terms of the community
is it,
space?
Building
or-
hospitals, is it social buildings, infrastructure, like maybe hospital,
Yeah,
you do that, or is it malls, is it hotels, is
Our
it...
key focus is in those 3 business areas. So it's retail, so improving our existing retail assets and growing, both geographically and also in the type of retail that we're providing communities with. Hospitality is focused around those retail facilities. So it's where hotels and branded product support and work with our retail colleagues. And in the communities, again, it's part of those, as part of the, an overall addition of those asset classes. So those are the 3 areas we're focusing on. As I say, there are different product types within those areas, and there are different geographies, but we're not looking to diversify outside those 3.
Ziad, coming to you here, I guess it's probably taken for granted that the private sector is booming. I have to say, I have a struggle defining what's a private sector in the Middle East. Damak, private. Majd Al Futtaim, 100% private, I know that. Ad-Dar, is that private sector? Is that government sector? Is the development in these different type of companies differ because of the ownership structure? As a pure infra, what would be your take on that, looking at Damak, MAF, and let's say Ad-Dar, where there are the variety and sort of the investment profile?
Well, we are a 100% private company, and we procure our plots mostly from the governmental companies in Dubai. And in terms of, I cannot speak about the governmental companies, but I can tell you for a private company, the main driver of any project is the return on the project to the developer, and definitely the return can only be high if you are maximizing the return for the people who are buying from you. So that's the main target of any project.
Gurjit, in terms of Ad-Dar being, I guess, I don't know the structure of ownership as a private entity, is that more government owned, or how is the new structure now for Ad-Dar development is sort of panning out?
Of course, if you were to look at our overall shareholding structure, the Mubadala has a very strong presence in our overall shareholding structure. But over this last few years, our discipline has been now honed on to be very, very focused on strengthening our balance sheet. So everything that we do is very focused on the bottom line, and the various relationships that we cultivate in trying to get that is important. And I want to touch a little bit on this, not so much in terms of the relationship, but in terms of the topic that we are trying to discuss, which is when you are trying to carry out master plan developments, and these master plan developments need to be actually net positive to the balance sheet in more ways than one. It is all about how you can get almost clear offtake right at the point in time when you are master planning. You must have a very clear idea of where your clear offtake is going to come from. It can come from both the public and private sector. For us, we are in the business of delivering residential communities, which we have both for the government and the private government, and also what we do as a market rate development. And that helps us to bring infrastructure to our overall master planned communities. That infrastructure is extremely important because now you must bring the social infrastructure right at the onset before you start delivering your homes and houses. And that is an extremely important ingredient in making successful destinations in terms of livable communities, in the case of Abu Dhabi, for us.
Bishoy, we haven't asked you a lot, so I guess for you as a contractor working with these kind developers, what do you see, I guess, the rewards and risk for contractors? What are the risks, what are the rewards you see them at the moment?
The rewards and risks as working on master
these
developments
development
with...
costs with this emergence? You know, you've got a growth, you've got capital tied up. You know, what do you see your risks as mainly in delivering whatever services these gentlemen need?
Well, to some extent, we've all sort of matured after the last boom and the crash, to be honest. So our management of those rewards and risks are a bit more mellowed. Margins and the procurement strategies of 2006 and 7 and 8 are not being repeated, and I think that's something for the betterment of the industry. At the same time, all parties are being much more cautious. So we do a lot of due diligence on the developers we are working with, and in fact, sort of need to convince ourselves that the actual final product makes sense. Otherwise, we feel that we may be in a position later on down the road that we are stuck in a project that's not feasible. We honestly also have good experience from the crash in a sense that there was no bad intention from any of the developers who operated in this market. And most of the developers we deal with are government or quasi-government entities. There was a cash flow problem, there was a crunch, and that led to a lot of liquidity problems and things arising from it. But once things were put in order, and it took maybe a couple of years to do so, everything was again returned back to whoever was owed any monies. So we really have not suffered any major lessons other than to ensure that the project itself is feasible and that this developer is a developer who has a certain background and reputation and methodology of working that suits what we think is sufficient risk. During the tender stage, it is very transparent what level of risk the developer wants the contractor to bear. And some developers are more forthright in wanting to offload risk on the contractor, and it's up to the contractor to really select what he's comfortable with.
So be sure to put you on the spot. If you were working on a project for Gurjit or for Ziad,
we have worked on projects.
They're not paying you for whatever reason or don't agree or vary it. Will you stop work if you're not being paid?
We've worked for Aldar and we've worked for Damak, and both have paid us. So, yeah. But we have worked on projects where we were not paid for over a year, and we were in discussions with the developer. And as long as there's frank discussion and an understanding of why this incoming flow is not coming, what we do is we either slow down the work, suspend the work, but we've not really had any position where we're at loggerheads with developers, and that's something we're very happy with.
Okay, Robert, coming to you. I guess with all these recent announcements, several large project scales, what do you think that will have an effect on the residential market and specifically the rental market in focusing on the UAE?
I think the rental market will be very buoyant for the next little while. The simple fact is that we have a tremendous number of net migration that's happening. I think Abu Dhabi's government policy of almost forcing people to live in Abu Dhabi will have a tremendously positive effect for Abu Dhabi to make sure that their absorption is actually taking place. Will that actually take something away from Dubai? It may, but I frankly doubt it, because there's an inertia. There's a sufficient momentum and growth that's coming within Dubai area to pick up that slack. I think the key is actually trying to measure the supply side, because we had a supply problem, not necessarily demand problem. And all the money that's coming for the infrastructure is going to help. Will that translate into higher valuation? That is all to do with, nothing to do with actually what's happening in Dubai, but it's actually to do with the cost of capital on a global scale. What will investor be willing to accept? Is he willing to accept 2% return, 5% return, or 8% return? If you go to treasury bills, you only get, especially if it's dollar denominated, which is basically what UAE is, you're looking at 0.25% on CDs. If you're doing a bond, it's 3 or 4%, perhaps. In real estate, you can actually take a decent rental return. I think, Ziad, you're offering what, 5, 8%?
On the market.
On the market.
Anything between 6 and 8% on
That's
residential.
Exactly. Plus the potential for capital appreciation does make the residential play very attractive element. Coupled with the fact that this region, the people actually like real estate as an investment choice because it's something you can own, you can touch, you can feel, rather than the stock market, which is less transparent. And the perception of transparency and realness helps the residential market a lot here.
Yeah. I get Ziad coming to you. I guess just looking at colleagues that I have even here, my rent went up by about 15% this year. Some of them been asked to leave. So there's an escalation and augment and inflation in the rental market. Do you think the current increase in the rental prices are sustainable, or are we heading for another bubble waiting to burst, I guess? Will Dubai be the next Singapore with 2 consecutive recessions?
I think the easiest way to get into media today is just talk about the bubble and your name will appear tomorrow in 10 newspapers, just like having something on Miley Cyrus. But there is no bubble. And you know when the economy starts growing and the interest is high, we have a certain amount of stock of units ready on the market. So it's normal for those units to appreciate at a high pace, especially you're starting from a very low base. So the price of those ready units will appreciate at a faster speed at the beginning, and definitely the rental will also go up because you have an influx of people into Dubai, because one of the main strength of Dubai is being a safe haven, and we've seen it from an event like the Arab Spring. The population of Dubai increased approximately 100,000 people, and those people will want houses to live in. So it's normal that we see that a big jump in the retail, in the rental yields for the last 12 to 18 months. And if we can give you an advice, you're better off going and buying a property today, because we see it increasing more in the next 2 to 3 years, because you know that any real estate project will take at least 3 to 4 years to deliver. So any fresh stock coming into the market for the projects launched in 2012 and 2013 is not gonna come to the market before 2015. So you're gonna see the rental rates going up, but that does not mean it's a function of having a bubble in the market. On the contrary, we have more interest, we have a higher population, higher economy, more business licenses is driving population growth, which only wants a ready property. What can you do with an off-plan property if you want to live now? So yes, rentals again will grow, but please don't interpret this as a bubble in the market. Don't interpret this as having a negative effect on the growth of the real estate to come in the future. And like I told you at the beginning, the presence of regulation today will not allow developers to flood the market like what was happening in 2008. You have to be fully deep down in equity in every project, and at the same time, the buyer is more cautious today when they are buying from you.
Jonathan, with a robust market in the UAE, I know MAF were contemplating expanding into, I suppose, Syria at the time, Egypt, you got Saudi Arabia, possibly Libya and others. Is MAF still looking at expanding geographically in the MENA region, or have they decided to go back to core geography and just focus on the UAE? How do you see diversification geographically within MAF?
Yeah, well, it didn't stop, actually. We've just opened our first mall in Beirut about 4 months ago, which obviously took 3 years to build, so that just continued through. We've just started on Mall of Egypt, which will be a mega mall just outside Cairo, which will have a ski slope, which you might be familiar with. As a Majid Al Futtaim product, that's on site. The foundations are in, and structures starting to come through. Obviously, challenging time right now, but longer term sort of strategic decision to continue our investment in Egypt. Syria obviously is having challenges at the moment, and we'll wait to see how that comes forward for the future. We've just acquired more land in Lebanon. We have our residential project also going on in Beirut, which is going very successfully from a sales point of view. So we continue. Oman continues to be a source of pride for us in our wave development there as well. So Saudi is something on our immediate horizon, and probably retail-led, with the hospitality, with community support and value add around retail. So our geographical ambitions are, to remain a player within the region, obviously home-based in Dubai.
I guess final words by all the panelists before I go to the audience. Ziad, how do you see the market in the Middle East region for the residential, let's say, for the next 5 years? What advice would you say?
I can mainly speak about the market in Dubai.
Yeah.
Because this is our specialty and this is where we're focusing, and we can see a very solid growing market for the next 5 years.
Yeah. Robert?
Yeah, if you look at the entire region, you're almost looking at going back to school and looking at Maslow's theory of needs. Some regions you actually have to develop and provide basic infrastructure, power, water, sewer, and those things. That's the critical side, and that's where some markets are. And the housing in the form of very basic needs of a shelter, housing, and that's probably going to happen in most of the region for the first time. Dubai, on the other end of the spectrum, is on the what you call aspirational side of housing that's coming through. And there's nothing wrong with providing the entire element. I think the only caution that I can see happening in Dubai is being forced too much on the higher end, where the people, what I call the city workers, the nurses, the office workers, are not forced to live somewhere far away from where their place of employment. I think that kind of having a distributed, affordable housing in the community, I think is going to be the next solution. I mean, look, it's not just the Dubai or the region that's a problem. The affordable housing concept has been an enigma in the entire real estate community around the world. So this is going to be the next challenge that's going to come through.
So actually following up on what Robert and Ziad said, you asked about our opinions on the Middle East. I think there's a very different market dynamics. Some countries with large populations like Saudi Arabia and Egypt, the question there is a lot about housing for a younger growing population that may not have so much money to buy fancy large plush homes. And there's a lot of demand there and the problems in the supply. And markets such as Dubai, which I'm guessing a lot of us may be interested in and more familiar with, ourselves particularly, is on the other end of the spectrum. And although I agree with Ziad that there are a lot of positives about Dubai and that there's a lot of pride in an 11-year real estate story that has regulated itself till this point in time, I think, without being dramatic, that to try and mitigate any possible busts in the future with the IMF warning in a report a few months ago that Dubai may also be moving at a very fast pace, and that there could be a few suggestions that could be implemented in the real estate market that may be not to the immediate pleasure of contractors and developers, but maybe for the betterment of the sustainability of real estate, such as increasing transaction costs. Like in countries in the UK where you pay 5% stamp duty, for example, so you cannot flip properties, such as reducing the amount of income that can be generated from off-plan sales, where in the US, for example, even if you book a unit, you can pay maybe about 10% of that unit and then pay the 90% only when you deliver it, and such as the proposed discussion that the central bank sort of launched in the media and then retracted about reducing the amount of mortgage, the LTV, the loan to value that banks would be allowed to give to people, expats and locals, down to 50%. And with all the sort of fury they faced, they went back and said, you know what, that was just a discussion and we'll stick again to 80%. So I think if they really look at suggestions like these and ensure that there's more long-term sustainability and reduced growth, I think when you have in 1 year 20% jump in prices or 25% in jump in prices, that cannot be sustained on the long term.
Yeah, I think they're all good points that have been made. Our belief is that within as a globalization, as a broad statement, within the MENA region, we see growth over the next 5 years. Obviously, there are individual circumstances in countries, whether it's political or legislative issues, but generally the fundamentals we believe are positive. So, yeah.
Gurjit?
We operate within the UAE sphere and within the Abu Dhabi immediate market. And for us, the last few years has been very focused on building up a very strong recurring income base. This helps in our capital formation, and that comes from the growth in the rental market, although gradual, but very focused. It's building up a very strong balance sheet for us as we move ahead. So yes, we would look at it as a positive upturn in the residential market. We try to create value add for the occupants, and our aim is then to convert them into purchasers of new residential product that comes into the market from our end.
Thank you. I would like, at this stage, invite questions from the audience. If the lights can go up so I can see the hands, because at the moment I can only see the spotlights. I think I spotted the gentleman over there first.
Thank you. Thank you to IGP and Construction Week for putting together quite a interesting bunch of people who I think if we speak amongst ourselves will suggest that we actually know what we're doing, firstly in construction and in property. So on the basis of that, and obviously the panels and the strength of the panels you've got here, I think the contractor gentleman, Mr. Pachar, is that right? You have highlighted, I think, what we all should be asking or answering, which is what are we going to do to avoid what we did before? It caused so much heartache and so much problems for so many people. And yet 3 of the developers on the stage haven't actually addressed the 400-pound gorilla in the corner of the room. So Ziad, thank you for your feedback on clearly what is a sensible suggestion in terms of regulation and where it's gone to. But can we please, as an industry, actually talk about the problem, understand it, and not make those mistakes again? I'd invite the other 3 developers to please give us their feedback on what we should do better as construction professionals, as contractors, and as developers, to not make the mistakes we made before.
Okay, thank you. What should we do better as contractors and developers? Maybe Robert?
I can start with this. I think in one of the panels in the previous years, they said, it's all about the word risk management, and it's been talked about more and more from every aspect. Somebody said, if you get the salespeople to get contracts, you'll get all the sales, but no profit. If you get all the lawyers to manage all the sales process, you'll get no contract. Something to that effect. The key element, and I'm fundamentally a believer of a capitalist system. You actually let the team and individual companies to actually make that calculated risk and make that call, whether to actually bid and shave the last 5 dirhams per square foot on that bid. And because of that aspect, you go through. Once you start protecting, putting sort of regulation and elements like that, you're actually entering into the dark territory where you have lost that zeal to innovate. And I think as a developer, I'd rather leave that aspect to individual contractor to come back when they're through tender. There's nothing wrong with a reputable tender saying, we looked at it, but we don't think this is right for us. To us, it's just as much of respect for the next time just because they actually decline. There could be different reasons of why they're declining, but there's nothing wrong with it. And if they stick to it, because as developers, our job is to drive the prices down as much as possible to the point where there's got to be an acceptable risk on both sides. And I think good contractors, and it's been the case over the last 13 years I've been in the UAE, is that they actually know when to say no.
Sorry.
Carry on.
Go ahead.
No, go ahead, please.
Just to answer directly that question, in terms of, are we still doing what we did in 2008 and 2009? Well, even if you wanted to do this, you're not allowed to do it anymore. Again, we had 2 main problems in 2008, 2009. Over-debt and no regulation. The market has been growing for the last 18 months. The market now is fully regulated from the perspective of the developer, the lending institutions, and the buyer. It's even over-regulated in some instances. And at the same time, for the last 18 months, the banks have not been lending yet to the real estate industry. So all the growth that we have seen is equity growth. It's not a leveraged growth. You can't get today an off-plan mortgage, which was fueling unnecessary demand in 2008. You can't get today a project finance which you can keep in the company. You have to put that in the escrow account and spend it only on the construction of the project. You cannot leverage a plot of any project to finance any other purchase. The law today is taking care of most of the mistakes that happened in 2008, 2009. This is why so many people are again trusting this market. They like this market, they like that market, and now they trust it to buy more. Tell me how many markets you have where you can actually register an off-plan interest in purchase of a certain villa or a certain apartment. You have it today. You have a system called Uqud. You are registering in the government, in the Dubai Lands Department, any off-plan purchase, which unfortunately came a little bit late after the crash because it came into effect in August 2008. Yes, we were 6 years old. We cannot blame this. We're still a very young market, but totally we are now protected. And if banks continue on that sort, we will not properly grow. We need the banks to support this industry, to support it in terms of providing the starting point of this market is a non-resident loan. Because most of the buyers here, they would like to have a second home or a third home or a fourth home, whatever you want to call it, in Dubai for the weekends, for the vacations, and we need to support them with a non-resident loan. Those people are genuinely interested in buying a second home in the central London of this region. And we should support them to do this.
Thank you. I think we probably, one more question here, probably. I wish it would be different about just the risk management, maybe positive about the future and what's going on in the future rather than development. So I'll take George and I'll take the gentleman there afterwards, and then I'll close the session after that. So could we have a microphone here, please, at the front for the gentleman here? And then the other microphone for the gentleman there on that table. You make it quick, George. I'm conscious of time.
Good morning. I would like to ask the panel if you are include affordable houses in your development, master development. If yes, how much the percentage of this house comparing with others, and if this has a positive or negative impact to your developments.
Sorry.
Yeah, I'll take that. We're all looking at each other.
Jonathan?
Another tough question.
No, well, I mean, there are other markets where affordable housing is part of the planning approval, part of the deal. That doesn't occur here. So it's completely market driven, and what you as a business, if you want to specialize in an area, whether you see a market opportunity, there are particular geographical markets in the region that was discussed earlier where affordable housing, there's huge opportunities, and it's been promoted mainly at a sort of governmental scale at the moment with land being facilitated for developers to bring that product on. It's not something Majid Al Futtaim have focused on to date, and it's not in our plans going forward. That is not our market segment. However, across a large community, there is going to be different formats, and we're looking at various different types of accommodation. But affordable housing is not something where we think, as Majid Al Futtaim, that we can provide that. But we will be working with partners undoubtedly who do specialize in that area.
Okay, thank you. Last question, please, there.
Can I touch on the affordable housing issue? 2 seconds.
Yeah.
Unfortunately, affordable housing don't add up when you run the numbers. That is the fundamental problem. The land prices in most jurisdictions are way too high to actually make the affordable housing. And if you want real affordable housing, you actually have to have gifted land from the government with infrastructure provided to the plot line. Then you can actually utilize the construction costs to basically equate the affordable housing level. And that's probably the bare minimum, because the cost of construction has gone so high that you can no longer add the land price or anything else. And this is going to become a fundamental issue in many of the regions, and especially in Dubai.
Last question, please, and then we're going to...
Well, actually, it's a comment and a question at the same time. What I noticed through the crisis from 2008 until now, that the problem of that sector, construction or interior design specifically, that the companies are not getting the projects of their own size. What I noticed is that so many projects have been signed for projects that are too small to handle projects, and then that projects they stop regarding because of payment terms or financial problems caused by the company. So I believe that that policy of giving or awarding projects, not depending only on the company profile, but actually there has been a demand for regulating the companies, developers, construction, interior design or fit out. There has to be a regulator for which company takes what project. And I think this is one of the most challenges that we are facing today in 2013. And the other one, there is a conflict between who to pay first, the client or the contractor in general. Because a lot of the projects, for example, the client does not believe that, let's say, that contractor can submit the work on time. So they tell them, you work in progress, you reach a phase, and then we pay you for certain cases. For other cases, no, the contractor actually, or the designer, they take a down payment to start the project. Now, this is fair and unfair for both parties, because each one wants to guarantee something, and at the same time, it might not let small companies grow, which is unhealthy for the market in Dubai. So this, I want...
That's it.
Yeah.
Okay, Bishoy, quickly, I guess you're talking about mechanism for payment, advance payment. I know you're getting the right size.
I mean,
jobs.
I hear what you're saying, and to some extent I agree that at times there are problems. We've seen projects stalled because the developer or the contractor or the designer were not up to the standards of that project. But I will take a point here from Robert that I also believe in a capitalist market where the decisions, I mean, this is a big debate about regulation versus, free market policy. And we have seen that the developers who are not up to the mark, or the contractors or the design firms that were not up to the mark, have vanished or, shrunken and have suffered as a consequence. People get projects when they don't know when to say no, and then they lose as a consequence. And when they're public companies, also they announce this. When they're private companies, you see them shriveling. And then that leaves sort of the survival of the fittest, and it's a learning curve. So I agree with you. Maybe to some extent there can be some regulation, and your points are valid, but I think market forces are already in play and have done this a lot during the last 3 or 4 years. And our view is at the moment the survivors, especially here in Dubai and the UAE, are companies that have learned and have had correct basics.
Gentlemen, we can go on all day, but I think all is left is to thank our distinguished panel for a very interesting and energizing discussions. Thank you very much, gentlemen. Ladies and gentlemen, at this stage, please stay in your seats. Would like to move to the next panel discussion, and that's creating partnerships to enter new markets. I would like to invite our panelist, Bob Hope, Chief Executive Officer, SSH, Ashraf Al-Gharf, Deputy CEO, Projects International, Annie Ray, Managing Director, ACC India, and Colin Timmons, General Manager, Alfara General Contracting Company. Please join me in welcoming our panel. Just want to do really maybe quickly go through, starts with you. Just say who you are, your company, very brief about your company so people know who you are.
I'm Ani Ray, Managing Director of ACC India. We started last year in India. We formed the subsidiary of ACC, Arabian Construction Company in India. And within a year, we are quite successful in the Indian market.
Great. Next.
Good morning. Colin Timmins, General Manager of Alfara General Contracting. Alfara have been operating in the Gulf for over 30 years now. We are now working in Saudi and in India. I head up the contracting company in UAE, and I'm responsible for all the operational projects in the UAE.
Good morning. Ashraf Al-Gharf, Chief Operating Officer, Deputy CEO of Projects International, a project management company established in Kuwait '84. Now we have offices all over the place in Gulf area, North Africa, and Middle East.
Bob Hope, CEO SSH. We're a regional consultancy, over 50 years in the region. We operate in Kuwait, Oman, and the UAE, and we're currently opening offices in Qatar, Saudi, and Kurdistan. We provide multidisciplinary consultancy services and supervision along with infrastructure design.
Thank you, gentlemen, and welcome here. Just really want to start by, I guess my question is, why do you want to enter new markets anyway? Don't you have enough in your backyard and grow what you've got existing? Let's start with you, Annie.
To tell you, I mean, I was till 2011. From 2001 to 2011, I was in UAE market between Abu Dhabi and Dubai. Of course, with the construction market not going so well, most of the construction companies had to venture out. Some of them ventured in Africa, some of them into other places in the Gulf, and some of them gone to India and the subcontinent. One of the reasons to venture into other market is to you spread your risks. I mean, rather than concentrating in one market. And you learn, probably you transfer your expertise from your home market to the other market and bring it back, some expertise from the other market. So that makes a very healthy choice.
Yeah, Colin, go into a new market, well, you know nothing, you don't know the local, isn't that a recipe for disaster?
I think there's a big risk in going into new markets. At Alfara, we have looked to move into sectors where previously we probably haven't operated. And we've done that very successfully using a JV model. And as my colleague says, it's reduced risk. And it's given Alfara more work in sectors where there are better opportunities. So that's what we're looking for. There's been lots of discussion today about the market and where the market is. It's still very flat. It's still very challenging. Margins are under real pressure. So as a contractor, if you can find a sector where there are better opportunities, clients who you can work with and build relationships with, then it's well worth developing a JV on that basis.
Yeah. Ashraf?
To be frank with you, entering new market for us, it was not planned, the first entry. As I said, we started in Kuwait '84. If you remember the invasion when it happened in Kuwait in the 90s, all of a sudden you wake up in the morning, no company, no staff, no projects. So we have decided at that time, a strategic decision, that we have to be somewhere else geographically. So we opened our first office in Saudi, and it became like a strategy in the companies that geographical diversification is very important to protect us from the market turbulences. And this is very clear to what had happened in Dubai during the downturn. Being in other locations helped us a lot not to take a big hit on that. So this was our start.
And Bob, for you as a design consultancy, what's the driver for your expansion?
It's pretty clear. Our vision is to be the architectural and engineering consultancy, strategic partner, and employer of choice in the MENA region. That's part of our 5-year plan that we're 1 year into. The key part of that is partner. Our strategy, we too came out of Kuwait. We're established in 1 or 2 of the markets, but our intent as part of a clear part of our strategy is that we'll be present in all of the GCC markets and selected MENA areas so that we can be partners who people can work with in each of the regions. The second part of that as well is obviously there is a risk in each of the geographies. You have an ability then to move staff around, offer them alternatives if problems arise. And also you give people the opportunity to develop their career and move around with the company. So on a strategy of growth, it's very much fixed that we do need to move into the geographies. I think the key thing for me, though, is when you move into them, the people we're bringing in understand that particular market. That's really important for us.
Colin, for you, I guess you stated very quite well that, you know, a contract still hungry for work, the margins are under pressure. So when you go to a new area and you decide on an expansion strategy or a diversification strategy, what are the drivers for you? What makes you decide this is the place we're going to go to?
I think the drivers are, you know, are there quality projects? Are there clients that you would want to work with? What are the risks? We're very cautious. You know, we don't go into things without doing our due diligence, our checking of the jobs that are there. And, you know, this JV model is good for us because it shares risk. We can bring a partner in to work with us. Al Farah's mantra is we try to give an international quality of delivery at local prices, and clients like that. They like to hear that. And we can do that by working with partners, with JV partners. So we're cautious, we do due diligence, we look closely at the project we want to pursue. We put a team together, we spend a lot of time and effort making sure our technical submissions are good, and we get focused, and hopefully that brings jobs for Al Farah.
Yeah. I guess, Annie, in terms of, you know, what Colin said, you know, partner with somebody local, provide, you know, international service at a local price. Sounds a dream. Does that really work in reality with, you know, so what's the point of actually doing that in local prices? Then your margins are still low anyway. So does that, how does your partnership model, and what do you try to offer your clients to give them the right service, but return, of course, profit back to your organization?
Actually, local partnership, to start with, is very good. I don't think there is any alternate, especially in a market which is far away. You don't know much about the legal and the political environment. Going solo there, it is bound to be a disaster. But while going for a local relationship, you need to see the local partner, how they behave, but at least to do a fair amount of due diligence, though that doesn't guarantee any, I mean, a happy marriage. I mean, it's like your girlfriend. As long as their girlfriend is nice, when they become a spouse, that must be the most nagging. So we have that situation. I mean, I'm telling from my professional experience, not from my personal experience.
Carry on.
to tell you this thing. We made a JV. I mean, when in 2010, we went to Abu Dhabi. I mean, from here to Bombay, we had a JV. It was hunky-dory in the beginning, but the result said, and there was a tension and problems. But it's not end of the road. It's better rather than going hurry-kari, doing alone. That's not, and you start, get your experience, move on, maybe with another partner or maybe on your solo. But to start solo in a new market, it's really it can be disastrous.
Ashraf, your strategy for, I guess, going to new areas, risk reward, the partnership choice,
in fact,
what's the drivers?
We have adopted several models in entering new areas, not only JVs. Sometimes we, as we are a service provider, we follow projects, we follow developers. So sometimes we go to a certain new location with the developer. So this provides for us a very easy access with less risks. Sometimes we go in JVs. The most important thing for us when developing a JV is to really write a good tailor-made agreement that reserves your right and the other party's right. And of course, sometimes we feel we get what Annie was just saying, and sometimes it goes even to divorce. But that's the risk. Yeah.
So actually, when you say JV, are you talking about a formal legal type of joint venture, or is that just an ad hoc memorandum of understanding? You do this, we
in
will
fact,
do that.
we have adopted both. Sometimes we have a legal JV, authenticated and everything, and sometimes we have only an ad hoc JV on a certain opportunity or a certain deal.
Bob, coming to you.
Sorry to
yeah,
interrupt
sure, go
here.
ahead.
That, I think, also depends on the regulatory conditions in that market. Like countries like India, non-incorporated JV, which is like I think you mean by ad hoc JV, a consortium, you cannot open a bank account on that. Initially, we started on that. Then we learned that this process.
Yeah, sure. Bob, when you go into a new territory, you got SSH, big plans for expansion. When do you make the decision, I will joint venture versus acquire a company, and what would be the criteria for that joint venturing? Is it, marriage forever, or is it a temporary stepping stone till you get to know the market? What would be your strategy?
I'm glad my wife's not around at the moment. I think the important thing for us is having, for my previous employer, built businesses around the Gulf. The experience I have is when I look at the markets, it's different models to suit. We're going into a full partnership in Saudi Arabia because we believe that is the right way to operate in Saudi. We're on our own in Oman and Kuwait and Bahrain. We'll go for a sponsor arrangement in Qatar because we think that works and fits that market. And a similar thing as we enter Kurdistan. So I think in part of our strategy, we've looked at each market with the guys of experience there to try and find the right model. So I think it's really understanding your market and what the best model is. But without a doubt, in anywhere, you need the friends and support if you're particularly on the new entrant side. I think in terms of what we do, my advice out there is if you can and you have the time, work with someone first in a much lighter arrangement. In other words, I think we're on the analogy, date for a while, maybe get engaged before you get married, because getting divorced out here isn't easy. I can tell you that in a business sense. Yeah. So that's my take. Well,
picking on that, Bob, you said in Saudi you decided to go with a joint venture. So what stops your joint venture partner once he or she knows the ropes and knows the business and say, thank you, Bob, that was really good. I'm here in the market. You're not offering me any differentiator now. What would you do then?
Yeah, we picked our partner. They've been in the business in the East for 30 years. They've got an eye on the rest of the country, but they can't do it without the support of ourselves. There is always a chance of that happening, but again, by picking the partner, the profile, he's probably got about 7 years before he intends to retire. So there's a window for him, which, to be honest, once he gets into that position, we don't see an end game in that. But I think the other thing in that is you both take from that what we need. In 7 years, we could stand on our own. And if he can and we separate on good terms, then that's fine. And I think that's what happened with a lot of the contractors when I look at the models here. There was team-ups to bring in the skills so you learn what to do, and then gradually you could do bigger projects on your own. So I think there is an evolution towards that, and I guess we'll have helped build an architectural engineering practice for a Saudi local and supported the economy. So it's a bit of give back.
Yeah. So any partnership is a short-term solution, not a long-term view. Is that correct?
To start with, it's better to have a short-term unless it graduates into the long-term. Based on the experience, you cannot initially decide it will be a long-term.
Colin?
I think we set out in all our JVs for them to be long-term relationships. Successful contracting is about building relationships with your designer, with your client, with your JV partner. I'll continue on the marriage theme. You set out in marriage and the rewards are rich and life is going to be good, but if you choose the wrong partner, then there's heartache and there's pain. So, we put a lot of time and effort into selecting the right partners. There has to be real synergy between us and our partners. And it's fine having the most well thought out, detailed JV agreement put together by the most skilled lawyers in the world. But somebody has to deliver that JV, and that's all about relationships with us, with our partners. And we have 5 JVs running at the moment. We built 4 schools with weights from the UK. The JV's been running for probably 5 years now. So we very much think that it's about a long-term relationship, and that's how you get success in a JV.
Yeah. I should pick on the point of relationship, really. So JVs are about personalities, people who make it happen, make it work. in an organization, like, is that a model you would adopt? If the players change, then that JV is no longer strong as it was, and I think we've seen many examples in the business of that.
Yeah, of course,
how
in
do you
each
see that?
JV it's limited by a period. So you have the time to test and work with your partner if you feel that they are changing or the JV is not successful as you believe. So you still have the chance to modify or even terminate the JV if it is the only solution.
Yeah. But Bob, just on a different point, I guess expanding into attractive markets. I guess you and I worked for similar companies. Still for one, you in the past for Atkins. They did not go to Libya, if I recall. We didn't go to Libya, and we were celebrating and dancing because, of course, our other competitors who did lost millions and millions and had to announce that to the stock market.
We didn't
So
lose.
we didn't do that either. Well done. My question is, how do you determine, with the current pressure, I'm still getting people saying, will Haider work in Libya? And my answer is absolutely no way. The risks are too high for us in terms of the reward. What are the attractive markets from your perspective when you are embarking on an expansion for your company?
I think just going back specifically for our company, it is part of the strategy. The Oman market offers some long-term stability, perhaps without the growth. Saudi's got the volume, Qatar's got the World Cup, the UAE. So each one is different, but the point being for us is that we want that stability, and we see the GCC, as much as anyone can, as a stable area. Then when we look to MENA, that's probably more pertinent to the question. We're working in Algeria. We're designing what will be the tallest building in Algeria, a bank. But we've gone with a client we know. We won't be staying in Algeria because we don't understand that market, and we'll get ourselves in trouble. We're going into Kurdistan because we've got a good partner there, and many of the professionals we've worked with have experience and links to that area, but we'll tread carefully. So I think the thing for me would be you take a good look at it, and your strategy would evolve around how you can partner and do it successfully. And the point made is that some people did do okay. I mean, no matter what happens, you get caught out on those circumstances. But I think with the play at the GCC in selected areas in MENA, as stable as you can ever pick a market while, it's unlikely that all of them are lost unless it's something very significant, and then it's a game-changing event, and we've all got to think again. Yeah. So for us, we think it's a solid footprint to look around the GCC. And when I look back over I've been in the region 15 years, and my old company has been around a lot longer, my current company, it seems that everyone's had the day to some extent. By being in those markets and having that spread, and the way the clients are now becoming a lot more regional, I think as a strategy, we'll probably see a lot more companies realize. I just hope that I can get into the space at the level below you big guys, but we are around that footprint and offer something to our clients, and particularly partners in the other sense where there are firms that we want in this region who bring skills and expertise but don't want to set up in the markets for a lot of the reasons you've said. And we want to offer the ability to team up with them on project-specific JVs so that we can bring our clients here the best team to deliver that project. We're here, we're not going anywhere. That's the confidence for the client. Some of them don't understand this market and they're a little bit afraid of it, but we provide the link. So that is our play on how we think we can provide a space and a service to our clients.
Yeah. Ashraf, in terms of good markets for yourselves within the GCC and the larger MENA,
of course,
where's your plans for expansion?
GCC was and remains our first focus, of course. Now, Saudi Arabia and Qatar and the Emirates are the main focus. Kuwait, there's a lot of projects on the pipeline, but a bit slow. We are also concentrating in North Africa. Despite the political instability, we have very good operations in Morocco, Algeria, and Egypt. In our longer vision, we have Erbil, Iraq. We just opened an office recently, 4 months ago. We have India in the long term. Also, we want to focus on India. Yeah.
Colin?
Well, we're very keen to keep a strong hold of the market in UAE. I think there are good opportunities here. We hope that margins will return and give all the contractors some reward for all the hard work they're doing. We're in KSA, we're in India, Mark said in his keynote speech, don't think for 1 minute that Saudi is like UAE, and absolutely right. There are huge challenges in setting up a business in KSA, in particular visas, getting labor, getting quality subcontractors, getting staff. So all these are risks to a contracting business, and when you're working on very, very low margins, there are added risks. So at the moment, for us, it's focus on UAE, try and build our turnover and workload. And if a client would want us to go with them and support them in one of the GCC countries, we'd consider. But I think there are risks and significant risks for a contracting company.
Any view attractive areas for growth?
Based on my present domain, I'm based in India, but based on my previous experience, I can say the biggest market I see in GCC is Saudi Arabia. I mean, with its pros and the cons. But if you go outside GCC, I think Iraq will be the biggest market when it stabilizes. And of course, the subcontinent remains. There will be opportunities there to pick it up. But for every kind of opportunity where you go in a new country, you require to be very clear. What is your goal in that market? Whether it's a long-term or it's a short-term opportunity just to take care in the short-term one. That focus should be very clearly defined. I mean, people cannot think that the hangover of a one country to take it another. I mean, that's why most of the new ventures, it fails. The guys who go there or in the management, they probably feel, okay, I'm used to in certain conditions, I will get that. That doesn't work.
What I would like to do at this stage is go to our audience and invite some questions to our panel. If you please just put the lights up a bit so we could see people. Just give me a second till I could see. Right, I've got a hand there. He's been raising his hand for a while, so there at the back. No, yourself. Yeah, keep your hand up.
Thanks, gentlemen, for the very interesting topic. Working in the Gulf construction market has always been a big challenge, and partnering with local companies, partners, sponsors, could be sometimes very dangerous and a big risk. There has been lots of bitter experience in this region where many international companies came and operated here thinking it's a very lucrative, they could easily make money, but they ended up in courts. So what sort of factors and considerations you would normally think of before you get into this market? Saying that some companies, for instance, they always look for big names, you know, big government officials to partner with. Thank you very much.
I think, I think the factors we would look at as a contracting company is, can we deliver? Can we deliver the project? What's going to stand in our way? Can we source labor? Can we source staff, plant, machinery? And if there are any difficulties or challenges that would prevent us from being able to deliver, then we quite simply would walk away and say this project is not for us.
In our case, it's a bit simpler than contractors because we don't have a lot of resources to devote to the projects. But however, from experience, the most important thing when selecting a JV or dealing with a partner is you have to study carefully their professionalism and culture. The difference in culture and the way they do work, it makes a lot of problems with you on the long run. So we have to do a very, very clear due diligence on our partners before we sign with them any kind of agreement.
Gentleman over here, please.
Hi, Cathal McElroy, MEP Magazine. Which GCC market have the panelists found it most difficult to set up partnerships, and what were the reasons behind that?
Which markets do you find to be the most difficult to set up joint ventures in or into?
From our experience, and to be frank, sometimes it's Qatar. Registering an office or a firm in Qatar is a very lengthy process, and it requires a lot of approvals, a lot of authentications, a lot of certificates to be granted.
I think all the GCC countries have similar challenges. You know, it's about getting a sponsor, it's about getting somebody you can work with. So our first-hand experiences of KSA, and we've managed to set the business up and it's running well, but it's taken time and effort. So I don't think any countries are easier than other GCC countries. It's all a challenge.
I think the key part of this is having people in your business who understand. When we built the management team from the internationals that I've brought in, they know their specific market very well. So you really need to understand and be realistic of your expectations. I think, harking back to the other question, is that people within experience go in making promises they can't keep. I think it's doing your planning and your homework. It's then being realistic about the timelines for the registrations and sponsorships, because they take time in all of them. If you've got realistic expectations and you build it up well, I think that's what leads to the longer term partnership. I think some people and some businesses, particularly on the multinational side, were pushed to go into markets they weren't prepared or weren't ready or able, and disaster ensues. It's as simple as that. So I think a lot of it has been getting the expectations wrong. I think when two experienced parties meet, discuss with the right timelines, there's some very successful partnerships out there.
Any experiences in the Middle East here?
Yes, I think more or less all GCC countries has the same same regulatory conditions. Yeah. But especially in Saudi, I think it's better to have a Saudi partner, especially on the visas and other issues.
Yeah. Okay, gentleman there. Yeah.
Gentlemen, I'm Robert Hill from Multiforms, Architectural Facade Specialists. The discussion is about creating partnerships to enter new markets. I'd like to ask each of the contractors on the panel. There have been lots of discussions about JVs to enter new markets, but I wonder, have they considered supply chain partnerships with existing supply chain partners that they can trust to reduce risk rather than selection only on lowest price?
I've got a lot of experience of supply chain management in the UK, and my thoughts were that that model could work in UAE, but in a market where we're driven by first past the post on every single project, it's very, very difficult. You set up your partners, you work with them on a tender, you work with them on the bid, and it doesn't necessarily guarantee you the best price from that supply chain partner. Now, if you put that in your bid, and it's not the best price in the market, you're not going to win the job. So I think there are real challenges around supply chain management in the Gulf. It would be nice if we could line up all our partners on all our projects. We try to do it on the larger size projects, but it's driven by price, and cheapest price doesn't always go with supply chain partnering, I think.
Yeah, it's in a new market, it's difficult to carry forward the same supply chain in your home market, because most of the cases, the same supply chain, they are not present there. So it's a challenge.
Any other questions? George here, please, microphone for George. Anybody else? Okay. George, closer to your mouth. It's not working.
We can hear you, George.
Hello, good afternoon, gentlemen. I'm George Kenny from Harvard. I would like to ask you something. We have a motto in Harvard, which it is, choose carefully your partner, which is applicable, of course, everywhere, as you said, either in your private, either in your professional work. Do you have any processes, and what values more in this process to choose your right partner? And the second question, it is, if you have, what about have partnership with the public to create a private partnership? Do you have any experience about that?
Yeah, again, I've done a lot of PPP projects in the UK. You all know it's used widespread in the UK to build schools, to build hospitals. Will it ever come to UAE? Then I'm not sure, but it is a good model. But it does need significant investment from contractors, from banks, from designers, from all the parties that are going to go together and deliver that project. So I would hope it will come, and it will be a procurement model used in UAE, but I'm not sure that the clients out there think it's a good tool at the moment.
Bob, public-private partnerships, is that a model here that could work?
I think so. I mean, it looks as if they're going to close on the one in Kuwait for the power and energy, and that would be good news, I think, for the region. I think Again, this is part of each country is very different, even each emirate here, and the people who've been around the block understand that. If there's another tool of policy that they can use to achieve what needs to be done, I think that's an excellent model if you can work it, because what you want is the private sector really bringing in the skills to deliver these major projects. I think at the very top level, the challenge is if you want this and you enable these projects that take a massive investment just to bid them and to set them up, what we also need is government recognizing that they need to provide the infrastructure in terms of visas, schools, everything else, that delivering any major project is actually, once it gets to a certain scale, you need the government to wrap around and support it. And if you don't get that, even the best conceived projects of all can fall flat if you can't bring the people in, can't get the expertise in, can't get the funding. That to me is that headline challenge to go with PPP. So the partnering bit I'd like to see is that partnering with the government that at the high level provide the facility, because these 2030 visions, if we're to deliver them, we need more help. We're willing to do our part, but we need more help from the government.
Ashraf, your experiences with
as Bob said, in Kuwait, we have they have tendered many PPP projects, and but still they are in a very initiation phase, not yet started. But we are making the consortiums now, selecting the consortiums.
Any experience?
Yeah, if you see PPPs are in UAE for last 10 to 15 years in terms of a power. All the Abu Dhabi, especially in Abu Dhabi, it was not so much in Dubai. Yeah. All the major power plants are in PPP. Now even in the transportation mode for the airports, Saudi Arabia has started with a project, first project in a PPP basis. I think it will be the call of the future. I mean, it will be coming. While in the PPP, you require a very good, your partner, the local partner, because you are going to deal with the government. It's very, very difficult for a foreign company to deal with the local government, with the conditions.
Come and see me.
We have time for one more question, if possible. Keep these guys work for their money. Actually, no money either. Anybody else? That's good. No? Okay. Well, this stage, gentlemen, thank you very much. It was very interesting. And thank you so much, and best of luck for the future and for your partnership.
Thank you.
Okay, thank you. Ladies and gentlemen, I think it's time for lunch, and I think we will be back here at 13:30. So enjoy your lunch, and please be back here by 1:30. Thank you.